Good morning. This is Joe Krutsinger, and today is March the 31st, 2017. I'm going to have a white paper update today. I'm using my 4 strategies, and I'm comparing them using the AMD stock. I put it in buy-only mode. I'm trading $10,000 per share, per trade, and it's over a 2-year record. And this is just show you a way for you to do your own research. For instance, if you pick a stock you like and you have the 4 systems, the technique I'm going to show you today is what you would do when you're trying to decide which of the 4 systems is most appropriate for your style. Duane Sachs, my friend and associate for over 15 years, has retired. We all appreciate his service and unflappable great attitude, and he will be missed. Please direct all business to Fully Automated Trading, Inc., P.O. Box 4223, Kansas City, Kansas 66104, and call me directly at 913-334-2202. My email is joecrut@gmail.com, and of course the website is www.etrackrecords.com. And don't be afraid to call me for just any old reason. If you want the TSWs, you can't get something down from JK members, any reason at all, I'll be glad to help. That's what I'm here to do. There's 3 terms I like to define in all my presentations. First of all, hypothetical, simulated. These mean the same thing. These are trades that have not been executed. They're generated by a strategy with the benefit of hindsight. Everything in this presentation today falls in that category. The next thing I like to do is a blind walk forward. That's where I just kind of set the workspace aside for a week or 2 or 3 or 2 years and see how it walked forward on unseen data. Now that won't show you slippage, but it'll give you a good idea how the math works. And of course the best results are always real results. These are actual trades that have been filled in an exchange. Whenever I define and show any of those 3 types, I'll try to tell you these are hypothetical, or these are blind walk forward, or these are real. Everything in this presentation is hypothetical. Well, this is the disclaimer that we have to put with all hypothetical presentations. And you can get the PDF from me and read all the disclaimers at your leisure. It's kind of hard to read them in the screen, but I'm not going to sit here and read them to you, lest it be known that these are hypothetical simulations, and take everything that's hypothetical with a grain of salt. Before we get into our main presentation, I'll do a little bit of housekeeping. Every 3 or 4 months I change the system I use for my IRA account in my True Automation for myself. I'm switching as of today to Joe Crut's Razor on the Mini Dow. I like the size of the Mini Dow contract. I like the fact that you can use a little smaller stop, and that's important with an IRA type thing. And the way it's walking forward looks pretty good. So I'm looking at a profit factor. This is the one that came in the optimizations that were posted on March 23rd. But you got a high profit factor of 3.4. The ratio average winner to loser is 2.44. That means you make $2.44 for every dollar you lose, and you're right 58% of the time over the hypothetical. And the drawdown's less than $500. It's only in the market 6.54% of the time. So it's the kind of thing I like for an IRA type situation, and that's what I'm going to be trading. Here's that YM on the Razor. There's the equity curve, so you can analyze it and see the drawdowns and the flat spaces, etc. And then over to the right are the settings, so you can just pull up a chart. This is a 1-minute chart, and because it's a 1 minute, you don't have to have it backtesting resolution set to 1 minute because it's automatically 1 minute already. I have a $6 round turn commission, and I have a $10 round turn slippage figured in the results. And it's using a $150 stop. It's interesting, it only takes new trades between 8:58 and 9 o'clock, so it's a very narrow window. It does a breakout, and it gets out of all trades about 20 minutes to 2. It has a little trail, and it looks pretty good. You're taking a look at a period of time for 3 months, and it does about 45, 43 trades, somewhere in there. So it's I think it's a good shot, and that's what I'm going to be doing. This is the last slide about Joe Crut's Razor on the YM, but I just wanted to show you on a chart. It doesn't trade too much, and it caught that good move there, and then the very next day it caught another good move. When the market went flat, it really didn't do anything, and that's kind of what we're looking for, is something that tries to catch the bigger moves and only has one trade a day, and that's the razor. Often clients ask me about, how do you develop a system? What's your timeline on doing it? Well, of course, the first thing you have to do is have an idea for a strategy. Whether it's closes above the 20-day moving average, you buy; it's below the 20-day moving average, you sell. That type of a system. But the first thing you do once you have your idea is to go to initial test. You do a simulated back test, and you can check, 2-month data, 3-month data, 4-year data, and get a feel for the time frame and how often you want to optimize or recalibrate. Then the next step I do is to try to do a blind walk forward to see a step into reality. See, does it hold up over time? And I've done that with all these systems to see, which ones hold up the best and about how often they need recalibrated. In most cases, when you're trading the stock indexes, my experience is if you take 3 or 4 months of data and then you optimize once a month and you watch the switcher in between, that's pretty well the way to go. And of course, then you do your real-time validation where you check and see how does it really work on real data. All right, now to the white paper. In order to trade stocks in truly automated version, you pretty well have to do the buy side only, because TradeStation doesn't like automation and sell. You've got to borrow the stocks, and there's a process there, and automation really doesn't do that well when orders get rejected. So the way to do a buy-only strategy for a stock is you insert this system and go ahead and optimize it the way you normally do, and then you go over where it says sell short and you turn it from on to exit only. That way when you get a sell short signal, it will exit your long trade, but it will not go short. And it's just a pull down menu you do after you've done your regular optimization. Okay. The first of our 4 strategies we're going to look at is shapes. This is shapes on the 60-minute data going back for 2 years using $10,000 per trade. It's long side only, and it shows making $8,450 in that 2-year period. The return on capital is 84%. Annual rate of return is 31%. These are great numbers, obviously. The drawdown's fairly big. The drawdown's about $8,600 over that period, so you had a drawdown almost equal to the net profit. So that's something to watch out for. There are 255 trades, so there's quite a few trades in this situation. 47% are correct. And look to the right, and you'll see the settings, and you'll see that it has a stop loss of $1,250. So that's on the whole position. So if you lose $1,250, it gets out. Once it makes $1,250, it risks 30% of its profits and trails in that manner. But that's pretty well the way I have it. I have it as a $7 in, $7 out. That's $14 round turn for the trade. And then also I added $14 slippage for the trade. So that's consistent on all these examples. But those are the settings for the AMD on shapes. Now here's the chart of AMD back to February 8th through March 31st, and it shows the buys and the exits, and the purple line shows you the open trade equity every hour, and you can see the drawdowns and the makes, etc. But it gives you an idea of the frequency of the trading. This one trades the most of any of the 4 over this data, the way I have it optimized, and so that's something for you to consider. If you like to have a lot of activity, this is one for you to look at. The next strategy we're going to look at is BarNone. It again is also on 60-minute data on the AMD, and if you notice the background here on the BarNone is a lighter blue. The other one was a dark background. I try to put the slides that go together color coded so you don't get too confused. Now this one makes twice as much money. It makes 16,009, and the drawdown is only 4,000. So it makes twice as much money with half the drawdown. It only has 35 trades, which isn't very many trades, but it's the way it is. It has an $1,150 stop, and once it makes $700, it risks all of its profit plus a little more, but it drags with a trail below it. And that's this particular one. I've got it at a 2 cents per share commission in and 2 cents per share out, and the same for the slippage. So you can change your slippage any way you charge your stocks. They have both plans, a per share commission schedule and a per trade commission schedule. The results are basically the same. They don't make much difference. But I'll show you at the settings which one is being used. Bar none is my preference for stocks. I think it's the easiest to optimize. I think it holds the longest, and it's kind of easy to understand. But that's just my preference. Here's bar none on a 60-minute chart. This goes back to September 27th of 2016 through today, or actually last night, and you can get a feel for that trade there of 996 trades about January the 20th. It caught that great big one, and it catches a couple big trades, and then the rest of the time it just kind of chops a little bit with little trails, which is what you expect in a pretty good system. The equity curve there is below with the moving average, so you get a feel for that on each of the charts. Our third look is Joe Krut's razor. This is now down to 5-minute data, 10,000 per trade, same as all the others, only on the buy side. And you can see it's got the most money. It makes 26,000. Only 13 trades, 92% profitable. Drawdown is only $2,400, so this is very, very good. It has an $800 stop on the position. It has a time window. It's very short, between 12:50 and 12:55. So it's around that lunch hour period where people kind of pull away from the stock market. And if there's a breakout in that period, it's usually a pretty good one. And that's what this optimization shows. And when you look at the Joe Krut razor chart, this goes back to February 24th. It's a 5-minute chart, and you can see it caught a pretty good trade there on the 5th of March. And it held it to about the 21st of March, and that's really what it does. It holds it for a little bit longer, and that's why it has fewer trades. Last but not least of our strategies is Joe Krut's ribbons. Joe Krut's ribbons adds a feature to razor. It takes the regular razor mechanism, and it also must qualify that the breakout trade has to be above 8 moving averages, exponential moving averages. It's like a ribbon that goes through. And so it has much fewer trades. And in a way, that's less reliable, because here you've got a 2-year record and you only have 5 trades. That's the bad news. Good news is they're all winners. It makes $23,000. It has a drawdown of $8,400, so it's pretty decent drawdown because it's hanging those trades for a long, long time. It only has a 650 stop, which is the smallest stop of all. It has a trail that once it makes $200, it risks 70% of the profits, so it's trailing out there. And again, it's about 1240 to 1255 is when it's looking for breakouts. Again, it's a lunch hour type breakout situation. Interesting system. I would call razor with ribbons a lady in waiting. If you have a couple stocks that you don't want to trade in and out of very much, if you tune them up on 5-minute razor with ribbons and then automate them, they won't trade much, but when they do, they historically have picked pretty good trades, pretty good size trades. So that's the way to use razor with ribbons. Just as a overview to take a look, Shapes is kind of a pivot type system. It looks for lows, it buys lows and sell highs. It's a swing type system. Bar none is a system that looks at a pattern, looks at the days of the week and see which of those patterns is most important on which days of the week, and so it's that type of a system. Razor is a volatility breakout system in a time window, and it's buying high and selling higher type situation. And razor with ribbons is that same thing, but it has a further qualifier that it has to be taking in the direction of 8 moving averages. So it's looking for bigger trades and fewer trades. So that's the 4 systems. And here's what a razor with ribbons trade looks like. There's one trade there in the middle, pretty decent trade that caught, I don't know, a little over $1,000. And in the next trade, it's just in, and it's got a slight profit in it right this minute. But that's the way it trades. It's a lot slower type trading vehicle. If you notice, when we did the 4 strategies, I didn't show you the equity curve. I wanted to put the equity curves all together so you get a feel for the number of trades and the angles, and you can see why I kind of picked BarNone. BarNone has 35 trades over the 2 years, so it's enough trades to call it statistically important. It doesn't have much drawdown. It's either flat or making money, flat or making money. If you take a look at Shapes, Shapes started out poorly, had a pretty good drawdown early, 110 trades, and then all of a sudden it took off and it's doing very, very well. Razor was consistent through the whole process, but there's only 13 trades, and Ribbons made one great big trade, and then the other 2 are just so-so. So that's the situation. And that's the way these 4 trade, the way I've tuned them. Now, you can tune them on 1-minute data instead of 60-minute data. You can tune them on daily data. In the case of BarNone and Shapes can go daily. Razor and Ribbons can only go with minute-by-minute data. But you can tune them different ways. I'm just trying to show you a way where you could say, okay, this is the stock I want to trade. Now, which of my 4 strategies fit the way I want to trade the best? Now, here's where getting the PDF might help. I've tried to compare these 4 together, and so you can look and see what the total net profit is for the Ribbons, the Razor, the BarNone, the Shapes, and you can see them line by line right next to each other. Again, on this slide, the important thing to look at is total number of trades. The Ribbons only made 5 trades, the Razor made 13 trades, BarNone made 35 trades, and Shapes took 255 trades. So to make $8,400 with 255 trades with an $8,000 drawdown, that may not be what I'd like to do. And so you either pick one of the other systems or you tune up Shapes using a different time frame. Now, these are just still more statistics on the comparison of the 4, and the reason I've divided it up into 3 slides is because I didn't want the print to be so small that you couldn't see what's what. But this shows you the average trade is that top line that happens, and so the average trade on Ribbons is 4,600, the average trade in Razor is 2,000, the average trade in BarNone is 484, and the average trade in Shapes only $33. So you can see, again, I'm pretty well sold on BarNone as the selection, but you have to make your own selection and decide, what's best for you. Well, this is the last slide of the 4 comparison, and again, percent of time in the market. On the Ribbons, it's in the market 34.86% of the time. Razor, it's in the market 42.95% of the time. BarNone, it's in the market 59.85% of the time, and Shapes, it's in the market 69% of the time. It also shows you the longest period it went flat, and you can see that it was flat on the Ribbons for 162 days. In the Razor, it was flat for 56 days. BarNone, it was flat for 26 days. And Shapes, it was only flat for 6 days. So it shows you that intensity that happens with each of the 4. Well, as I always tell you, my main product is ideas, service, and support when you need it. If you'd like me to install any of these TSWs on your machine, all you need to do is go to eTrackRecords.com, pull down the support tab, follow the instructions, and I'll be glad to install them for you and make sure you have a perfect copy so you can see how this stock thing works a little bit. Also, if you want to have if you have a particular stock that you'd like me to run a recalibration on, I'll be glad to do it. Just let me know what you want me to do, and that's what I'm here to do. Well, your next step is just call me at my office whenever the market's open at 913-334-2202. Send me the TeamViewer 9 codes. I can install a trial of all 4 strategies. If you're a client, just call or email me. I'll send you the TSWs, or I'll get on your machine and install them. There's no charge, and I'll be glad to do that. My email is joecrut@gmail.com, and our website is etrackrecords.com. Well, good luck and great trading. We'll see you next week. Thanks for watching.